Ja, herzlich willkommen zu einer neuen Ausgabe SI-Interview. Ich bin jetzt fleißig. Normalerweise wäre ich auch in Kanada drüben, aber geht ja nicht wegen Corona. Gleich noch ein Interessenkonflikt vorab. Enwave. Ich bin Aktionär und habe letzten Freitag auch noch zugekauft. Und dann ist mir eigentlich die Idee erst gekommen, dass ich eigentlich mal ein Interview wieder machen kann, weil mit Brent ist es so, dass normalerweise, wenn ich drüben bin, auch mit ihm ein Interview mache, auch wenn sie jetzt nicht mehr in Vancouver drinnen ist, irgendwie kriegen wir es trotzdem meistens hin. Brent, thank you for your time. I said in my German introduction, I have a conflict of interest. I'm a shareholder. I bought last Friday some shares more. I hoped it was a really good decision. The reason was simple. The share price is really low and you're coming up with really good news. Not only the last 2-3 weeks, also I think the last 6 months you're coming up with from my standpoint, good, interesting news, but the share price is not reacting on this news. And after this, maybe it was a little bit stupid from my side, I should do the interview first and then buy some more shares, but I do it in this time opposite way. And after that, I bought some shares. I say, hey, maybe it's a good idea. Then normally in January I'm in Vancouver, but with the whole COVID stuff, it was not possible that I come over the last two years. But I'm really happy that you have time for me, and maybe you can give us an idea why we have this disconnection, or for my feeling, from the news flow and the share price. And and when I look at the people see now the share price and over the last 12 months, in February last year we was 170, and now we are trading under 90 cents. So you lose nearly 45%.
Yep. No, absolutely. Well, first of all, thanks for having me, Joe, and thanks for being a shareholder. Secondly, if we look at the share performance over the past 12 months, there really was one particular instance where the share price dropped significantly, and that was following Q2 fiscal 21 numbers. And so prior to the numbers coming out, there was a sizable short position, given the historical short position on our stock of about 1 million shares. And unfortunately, our subsidiary, who is producing the cheese snack in the United States called Moon Cheese, performed very, very poorly on that Q2 report. And that triggered the sell-off and a decrease in share price from there. That, combined with some COVID headwinds and some uncertainty on that particular business performance, caused the share price to be suppressed for quite some time. Regardless of NutraDried's struggles, Enwave's primary business unit now, the machine sales and royalty licensing business model through our vacuum microwave technology, did very well in fiscal 21. In fact, it was the best financial performance in its history. In over 20 years, we were profitable. We generated about 1.2 million in net profit, highest revenue in the history of the company, highest gross margin. And in terms of third-party royalty revenue, almost $1 million. And we're expecting or providing guidance to the market to hopefully close to double that for fiscal 22. Mm-hmm. So Enwave will hopefully continue to perform well, as we had done in fiscal 21. And NutraDried, we made a major change. We restructured the entire business in February of last year. And those cost-cutting measures have now taken effect, as well as we put in a leadership group that's actually gotten some wins in terms of increased distribution of this cheese snack product throughout North America. And we forecast that NutraDried should be bottom line profitable by Q3 of this fiscal year. They've secured enough sales or distribution to get there, but every year there's certain time periods where grocers will introduce a new product. Mm-hmm. So they've got the wins, they've got the yeses, and now it's just getting the product on shelf, which will happen late Q2 here into Q3.
Mm-hmm. So, but in January, what was the reason why Moon Cheese performed so poorly? I know exactly. It was your first product, and it's run really great, and it tastes really great. I saw this by Starbucks, and I have now the slide 22 on your actual presentation from your website, it tastes great. But the surprise, and when you look at also the numbers, it's 2019 you have closely to 30 million in revenue, and it's going down to roughly 50% down. So what was the reason for this?
Costco. So Costco, one of the logos on that slide 22, comprised of almost 50% of the revenue of NutraDried / Moon Cheese in 2019.
Okay.
And that was on the heels of a national distribution promotion where that single promotion was about $12 million in revenue. And so the following year, and this is based on performance of the product in certain divisions of Costco, the Costco opportunity went away. And so Costco's strategy with their own consumers is to create a treasure hunt mentality where you're bringing in new products every quarter or every year to keep people interested. So it's not always the same thing they're coming back to. And unfortunately for NutraDried, that really hurt their financial performance the following year. That all being said, this year, we've won back Costco and we've started to build that relationship again. We just recently did a national promotion in Canada at Costco. We've secured multiple divisional rotations in the US for Costco. And we're talking about second potential national promotions in Canada, as well as, I can't talk too much about it, but a more robust relationship for a format of dried cheese snack within the Costco ecosystem, potentially in the future here. So that's coming back to my earlier statement stating that NutraDried had a very rough go for a period of time. We made changes, we reduced expenses in the business, and now it's set back up to reach profitability later this fiscal year.
To better understand, do you get delisted from Costco, or you were still available but there's no promotion running there?
So there's two distinct opportunities through Costco. It's promotion, so singular event where you provide a certain amount of product and it sells through their system, or there are quarterly divisional rotations where buyers within the 8 divisions have their own independent decision making to pick which products they put in their stores for that period of time. And they can go multiple quarters in a row with certain products, or they can choose not to buy that product for certain quarters. And so for Moon Cheese's situation in 2020, following that big performance in 2019, didn't get those purchases. Hence the reason in a massive degradation of the revenue number for the following year, and ultimately an expense structure in that business, which was managed by a separate management group at the time, that didn't match up with the base core business. And so that's something that we've gone and fixed so that it doesn't happen. Even if we are going to win Costco again and that relationship to blossom, we still won't allow our expenses to balloon alongside our revenue number, which hopefully obviously will improve our bottom line number on a go-forward basis.
So, but Moon Cheese was the really volatile part in your revenue stream, and that was really brings a little bit this hype in also, but also then the collapse. Okay.
That's what I'll point to, and then I will also have a comment on the cannabis industry in Canada.
That was the next point. And I remember the last time when we meet us in person, it was 2019 or something. That cannabis is maybe the new big business, especially also from the royalty stream business. And we know exactly everybody or everyone who is invested in the cannabis business know exactly that the share price in all cannabis stocks are not really running well. What is your feeling? You are more on the back end. So you see what's really is in the market, what's coming up. What is the problem? What is the problem in the cannabis space?
Well, let's segment that geographically. So in Canada, you had multiple large companies who were spending before they finished their planning. And we are part of that in terms of we sold large-scale machines to several large licensed producers in Canada. We expected them to be installed in a timely fashion. And in reality, these companies missed on many fronts in terms of the timing of their own build-out of infrastructure, obviously delivering from a financial sense, and they've been crippled in the stock market. And ultimately, we ended up taking advantage of their mismanagement and poor performance in that we purchased back several of the large-scale machines that we sold when I last spoke to you, hoping they would start up for pennies on the dollar, and immediately resold those to US-based MSOs. And a key difference between these companies we're dealing with in the US versus the Canadian entities are that they actually have facilities where these machines are going into or already have gone into for startup and use. So we have large scale equipment in the US now being used, producing royalties for our business, and expect another 2 to come online within the next 2 to 3 months maximum. And then ultimately that pipeline of new business with different licensees and repeat purchase orders from our current partners is very strong. And so I gave it guidance before this fiscal year started of 10 large scale machines, 7 of which were targeted for repeat purchase orders. And so out of the 10, I would target probably 5 coming from cannabis within this fiscal year. So it's looking strong for us. Plus, we now have operating history at scale in cannabis, where other companies that are curious about the technology but are a little bit apprehensive can go and see it firsthand. In fact, they can even trial their own product at their facilities. We'll send our bat scale units out to do that now. And I really do think that cannabis is still a really large opportunity for Enwave on a go-forward basis.
And is still the business model that the smart part was really this royalty stream. So you say, okay, this kilos was running through them, you produce revenue with them. So is still this a major part also by the new contracts with the new companies or cannabis companies?
Yes, royalties, or if you want to refer to it as a technology access fee or whatever you want to call it, every machine we sell has an ongoing carried interest paid by the user back to Enwave, either based on the revenue generated percentage of that or weight base that we talked about. But a new structure that we've offered to be flexible to get deals done is time-based usage. So for every month of utilization on a specific scale of machinery, a distinct fee is paid back to Enwave. So rather than it be dependent on how much product goes through it, which is an accounting nightmare, to be honest, for those folks to figure out exactly how many grams have gone through it, we say, okay, well, we're expecting this to be generated from the throughput on a singular machine. You're going to pay us that cash on a monthly basis, and they've agreed to that. And so on a go-forward base, it's likely that structure will be more consistent.
Okay, but we see not only the cannabis and also the moon cheese. We see, when I look also the press releases, I see a lot of new products coming in. So, for example, the deal with Dole, or then you're coming up with Bondel. The Bondel is for us in Europe well known, and every 2-3 weeks you're coming up with new products or companies. They bring in new products on the market. When we really see this, that we see this in the balance sheet, in the cash flow model.
Well, as I mentioned, in terms of large scale machines that are expected to be sold this year, so far we sold 1 confirmed, right? So there's 9 more to go over the next several months. Most decision points we're anticipating are Q2, Q3 of our fiscal year. And a number of those happen to be from food companies who purchase smaller scale machinery for us, brought products to market, and justified a business case, which will lead to CapEx being spent on larger scale vacuum microwave machinery. Two, for example, would be Calbee, which is one of the largest snack companies globally based out of Japan. They're anticipated to make a decision on large scale machinery sometime in the spring here. And then the U.S. Armed Forces, which, as I understand it from them, they applied for funding to acquire large-scale equipment for the support of producing military field rations. And that funding is expected to be released sometime this calendar year. So that's another large food production opportunity for us. And then Dole, whom you mentioned, who I personally have been working with their senior management for, almost a year and a half now. And they've got several projects that could apply our technology to both reduce food waste, and provide functional nutrition to more folks around the globe, and also the development of unique premium snack products for multiple markets, not just the North American market, but Asian market, Australasian market, and potentially into the European market. And so those projects are all full steam ahead, and we're expecting decision points on large scale equipment from them sometime between Q2 and Q3, like Calbee. So when will it hit our P&L? In all likelihood through this quarter into next, and then royalties would start up approximately 5 to 6 months from PO. So the royalties will start to hit from the food side, sort of late fiscal 22 into fiscal 23. And from a cannabis sense, which we just recently spoke about, we're starting to build machines on spec. So we're not waiting for the purchase orders. We're actually investing cash into building some large scale equipment so that when they come in, we can deploy within 1 to 2 months and get those royalties flowing this year versus next year. So that's all part of our plan right now.
Yeah. So also in the food business, is it that you get royalties out of your machines? Yeah. Okay.
Yes, and it's typically dominated now by weight-based production. So every pound or kilogram of product produced, a set fee is paid back to Enwave. And again, that's in an effort to simplify the accounting strife of them having to send in quarterly reports tied to revenue. And internally at Enwave side, we already have a target of how much royalty we'd look to generate per machine, and that's what dictates that weight-based fee.
You have an very interesting slide or page on your website that is where your machines are running and which deal you have there. So you see the map of this is very interesting. For example, here something in Thailand or in Europe. It's very interesting. So that we see that really you are around the globe. Your product is around the globe. It's very interesting. Financial points. That brings me also to this thing that you're still, or the last two years you have negative EBITDA. That brings me to the point how much cash you have. Here in these numbers we have 11.7 million cash, and is it this enough to survive? I must say this is really a bad word.
Yeah, I know.
It's not really to survive. So, but brings is that you are run by your own by the own cash flow what you produce. That's the point.
Absolutely. So right now we're on about 9 million on our balance sheet, and we use a large amount to implement our NCIB, our normal course issuer bid, where we bought back over 1.5 million shares through the past 6 months. So we put some of that cash to use to try and stabilize the stock and get one large position out to reduce that overhang. More recent sell down, the past week or so was I think 100,000 share position from one of the cannabis ETFs, which when the markets were in a bloodbath, sold off the position of Enwave, and that hurt us. But it's starting to recover slowly here. From an EBITDA, positive EBITDA perspective, so in fiscal 21, again, Enwave's parent company, the machine sales, licensing, royalty business, had positive EBITDA, bottom line profit. It was NutraDried that killed us. And we had half a year at NutraDried where the expense structure was completely out of hand, and the revenues obviously weren't matching up with the expense structure. So we changed that. We fixed it. And we expect that to turn back to profitability by Q3 of this year. Anyway, nothing's anticipated to change here. We're expecting to be profitable this year and produce positive EBITDA. So long as we can mitigate the negative EBITDA from NutraDried for Q1, which has already come and gone, and have it close to break even on a cash flow basis for Q2, then we'll be in good stead and won't require any additional capital to execute on our business plans. We've already completed the build out of our toll manufacturing facility, which is something we haven't talked about yet, called RevWorks. We're ready for startup actually next week. So we'll have our first customers coming through that facility. First trial runs will be for some blueberry product, some banana product, and I think one of our tempeh partners is actually going to be doing some line trials as well. So we've already got some folks initially signed up, and we expect the more sophisticated operators like the Doles and the PepsiCos and et cetera to engage with us on that facility after we gain our SQF accreditation, which will take about 6 months.
Okay, so but the idea behind the question was if you need cash to maybe do a private placement or so on or not. That's the point.
No, there's no plans to do any private placement raising dough. I think, the way that the business is maturing right now, if we do need capital to grow the business or to help finance machine purchases by partners, it would be through some form of debt facility versus going to raise capital through a private placement, because the business should be able to support the payments on the borrowings to accelerate growth.
Yeah, this is always the problem when you are in this financing mode. Always you see there's so many Canadian companies, you are always in this loop that the next financing coming in the next few months, so a lot of brokers selling this down that exactly 6 months later you are on the table and want more cash. So this is very important.
Okay. No, it's not happening here.
Okay, perfect. Right, thank you for the update. I think this was really a very good one, and I like it, the story, and I'm happy that I bought some more shares. But next time I do it the other way. It's more smarter, I think, when you do your interview first and then buy shares, as vice versa. But it's. I believe in the story. That was the reason why I bought some shares, and then it's coming up the idea, maybe it's time to do a new interview. Hopefully next time we can meet us in person.
Absolutely.
So
I'm glad you did buy. Because the opportunity presented itself, right? You had the ETF sell off and the stock price get depressed, and pipeline strong. So hopefully you're happy by the end of the year, and I'm happy as well.
I have a long-term view. I bought my first shares 3-4 years ago, and that is going up to 260 or 270, and I was not smart enough to sell something. Then I believe in long term. But I see now the opportunity that can average me a little bit down, but only a little bit. Then I bought it with 90 cents. So 105 and 90 cents is not really a big thing. But now I'm well prepared for the next run.
Awesome.
Thank you for your time.
You're welcome. Thanks, Joe.
Ja, es war ein Update, Enwave. Und weil wir schon die Zahlen hier haben, hier sehen wir auch die Wurzel des Übels war Munchies. Munchies das ist dieser Käse, der vor allem auch bei Starbucks, habe ich den das erste Mal probiert. Die sind durch die Decke gegangen, die Verkäufe sind nach oben explodiert und dadurch war die Company eigentlich schlecht strukturiert. Sie haben Overhead aufgebaut und dann Kosten sitzen gehabt, wie die Umsätze rückläufig waren. Meine Frage war, warum sind die Umsätze eigentlich rückläufig gewesen? Das war vor allem Costco. Costco hat immer so neue Produkte, die sie im Handel reinnehmen. Costco ist eine irrsinnig große Kette, auch börsennotiert, läuft wie die Sau auch war aber sehr stark und die nehmen immer neue Produkte ein und promoten die dann. Und das ist genau in diesem Jahr passiert. Sie promoten es dann und dann nehmen sie es teilweise aber auch wieder raus, damit sie auch wieder Platz für neue Produkte haben oder eben, dass sie vielleicht auch das Interesse schüren. Also man macht ja auch teilweise Sinn, wenn du denkst, hey, das ist ein geiles Produkt, schmeckt man auf einmal, kriege ich es nicht mehr, dann kaufe ich es beim nächsten Mal umso mehr. So, sie planen, also sie sind scheinbar jetzt wieder drinnen und es läuft auch wieder, sie haben die Kosten reduziert und er geht davon aus, dass im 3. Quartal spätestens dann wieder operativ positiv sind. Was spannend ist, ja ein normales Maschinenbusiness, wo sie die Trocknungsanlagen, die man auch hier teilweise sieht, hier zum Beispiel, das läuft gut, das war auch auf Rekordumsätze und die Royalties, sie kriegen Royalties davon. Das heißt, sie kriegen immer einen gewissen Prozentsatz, entweder vom Umsatz oder im Monatsrate, wann das genutzt worden ist, oder einfach wie viel Gramm sie verarbeitet haben, aus Royalty ausgeschüttet. Und das ist auch schön angestiegen, man sieht das auch hier schön und das sollte auch im nächsten Jahr, also in diesem Jahr sich verdoppeln. Was da sehr spannend ist, ist auch Cannabis-Business. Cannabis-Business, wissen wir, ist ein sehr schwieriges Business und er sagt, das sind zwei unterschiedliche Märkte. Amerika läuft eigentlich sehr gut, Kanada läuft eigentlich sehr schlecht. Die Firmen in Kanada waren schlecht aufgestellt, haben Orders rausgegeben, haben es dann teilweise nicht nehmen können, weil sie nicht in Produktion gekommen sind, weil sie schon das Geld früher ausgegeben haben, als tatsächlich in Produktion reingesteckt haben. Sie haben teilweise diese Orders zurückgenommen, weil sie es für wenig Geld und haben es dann gleich wieder neu verkauft, die Maschinen, und damit können sie auch Royalties rausziehen. Und man sieht es auch hier, nicht nur Cannabis, und da kriegen sie auch Royalties, sondern auch hier ist das Food-Business, wo sehr stark groß ist. Hier Dole zum Beispiel, Calbee, das habe ich nicht einmal kennt, ist einer der größten Snack-Produzenten der Welt. Munchies ist ja eine eigene. US Army, das ist ein großes Ding, da sollte was reinkommen, jetzt auch wieder neue Dinge. Die kaufen meistens kleine Maschinen, dann kaufen sie große Maschinen und alles ist mit Royalties hinterlegt. Also das schaut jetzt sehr, sehr gut aus, wenn man sich die Newsflow anschaut, was da jetzt teilweise, ich habe es schon mehrmals gesagt, auch bei mir, ich verstehe nicht, warum der Aktienkurs eigentlich so schlecht ist. Die Nachrichten sind eigentlich sehr gut. Und das ist ein Disconnect, der allerdings meines Erachtens auch relativ schnell wieder sich lösen kann. Er hat auch noch gesagt, hier war das Munchies-Debakel, das haben sie aber umgedreht und sie haben einen ETF gehabt, der jetzt rausgegangen ist, und sie haben generell einen gehabt, der short war, also wo sie einen Aktionär gehabt haben, der eigentlich raus wollte, der hat 1 Million Stück gehabt. Kann man vorstellen, das war vielleicht irgendein alter Aktionär. Da kann ich mich erinnern können vor ein paar Jahren, dass da schon so ein Troubles gehabt haben mit einem, und den haben sie jetzt auch teilweise rückgekauft. Sie haben eigenes Rückkaufprogramm gehabt, um den Markt zu stabilisieren. Ich habe letzte Woche gekauft, das war vielleicht nicht ganz smart. Ich habe gesagt, eigentlich sollte man vorher ein Interview machen und dann auf Basis des Interviews die kaufen. Bei mir war es umgekehrt, aber es war vorher noch gar nicht geplant. Wir haben das eigentlich am Freitagabend, haben wir gedacht, okay, da schreibe ich mal an, ob wir ein Interview machen, und er hat sofort Zeit gehabt und deswegen ist das jetzt auch passiert. Also wie gesagt, ich bin Aktionär von dem und dadurch auch ein großer Interessenskonflikt. Ja, das war es auch von Enwave. Heute ist der 31. Jänner 2022. Ja, das war's von Enwave. Tschüss und Baba. Pfiat euch. Brent, thank you for your time. Was a great update.
Thank you. Take care.